This is your weekly market digest, a quick take on where the major indices and giants really stand before the chatter catches up. Let's break down what is setting up next. And today we start with an S&P 500 and the start with the candles. So what is the weekly and the daily closure on Friday? The daily was practically neutral, slightly bullish, and at this point we are not seeing any concerns. If we look at the 2-day frame, which is possibly an incomplete dark cloud cover, also could be opposing doji, at this point no confirmation whatsoever about the potential bearish path. The weekly closed with an indecisive doji. This could be a bearish harami cross if it has a strong confirmation, but at this point there is no technical support for such a move. And on the 10-day frame, we are seeing a fairly nice 3 white soldiers, which also closed on Friday. So at this point, S&P 500 is bullish, and if we consider our recently updated long-term charts and also some statistical studies that we shared with our members earlier on the website, you can see that S&P is technically bullish mid-long term. So if we look at the weekly closure for 04 through the lens of SPY, QQQ, DIA, and IWM, I'd like to say that maybe Dow Jones is the most bearish at the moment. It has a better chances for a pullback next week. However, it is far from being reversed here. So all the candles for all 4 are practically neutral, slightly bullish at the moment. Now let's have a look at the Elliott waves. This is a very interesting formation that we see. So first of all, I'd like to say that we discussed exactly a week ago potential completion of a bullish flag and the target 6335, 6437 for this run. And amazingly, it hit 6335, and I consider this as a completed structure. So we have a flag down and we have potentially a flag up. Now I would be looking for another wave down, which would be probably a bigger bullish flag. However, at this point, I'm not very sure about the potential count. So if this is a bigger wave, bigger corrective wave WXY in blue, then we would start an impulse here. However, this wave also could be an impulse for the wave 1, pardon, not an impulse, a leading diagonal, which is a motive wave. So in this case, I would be looking for a return towards the origin somewhere here, but without crossing, it would start wave 3 upward. So wave 3 would be somewhere between 6400, 6450, somewhere in that area. Well, let's see what happens next. I think that the next couple of days would be rather neutral bearish, and then we might see a continued rally. If we look at the bigger frame, this is something that we've been tracking since April 22nd, and this is the original chart. And generally right now, S&P 500 made over 18% since that call, and it wasn't able to make any solid bearish reversal. So there were a couple of attempts, but they all failed. As a result, the index is sitting with an 18% gains, and now I'm looking for another wave upward before, and maybe the wave 4 would be slightly bigger, and as we discussed here in the previous chart, so that's this could be wave 4 in blue. So now that's this is the perspective then we might see another wave up, a bigger correction for wave 4, and another wave 5 downward, upward for the next couple of months. Now let's have a look at the largest stocks: Microsoft, Amazon, Apple, Tesla, Meta, Nvidia, Google, and Berkshire. All of them, almost all of them, closed with bullish candles and bullish continuation candles. Even Meta, if it, even though it had a great red candle, I wouldn't be so sure about the bearish path here. So it could be just a bigger bullish flag before it starts a move higher. So nothing is confirmed for Meta yet. Nvidia closed with a potentially bullish candle. Google also a healthy path. So later today, we will discuss Amazon and Microsoft from a larger perspective. And the last one is Berkshire Hathaway. So far, this candle is somewhat neutral, potentially a reversal one. So let's see what happens next. At this point, it's kind of alerting because it pushed the price below the 200 days moving average. Well, however, this hammer here could start a rally. So let's wait for the next week. Now let's talk about Nasdaq. If we look at the candles, I would like to say that we have a fairly solid bullish path here. And let's start with the bigger one. 10-day closure on Friday. It was the 3 white soldiers, and now we had a chance. Even we might see a consolidation here for a couple of periods up and down, but in general, so far it looks very solid bullish. And the 15-day frame, which is closing on July 17, also had a chance to form a 3 white soldiers, which would be even stronger bullish path. And I'd like to say that technically both these formations are well supported by multiple indicators. The weekly closure, I'm showing the futures. Potentially it's a bearish Harami cross. However, we need to see a confirmation first. So the closure below the green candle next week would be it. But again, at this point, the larger odds could overrule this possible bearish pullback. And on the daily frame, nothing is bearish at this moment. We had 2 candles, 2 red candles, and even a chance on Friday to form a top, but nothing happened. And now we have 2 failures in a row. Perhaps this is better. This formation right now is slightly bullish. Speaking about Elliott waves, this is the chart that we've been tracking for a while. Again, with together with an S&P 500 since April 22nd. And since then, Nasdaq advanced almost 25%. Well, without any very sizable pullback. At this point, I'm seeing this recent top as either wave 3 in green or wave 3 in red. So depending on the size of the pullback, we would determine what would be the next move. So far, the pullback has been corrective, and I'm leaning towards the green path at this moment. However, the next couple of days might change this. So, Nasdaq is short-term somewhat neutral, but the long-term is solid bullish. Now let's talk about Russell. So Russell made a bearish candle on Friday, and we have a very good chance to see a continued weakness on Monday, perhaps on Tuesday. So the next candle would be fairly crucial, and it would depend whether we might see a bigger bearish momentum. For that, we would need to track our 2-day closure and the 3-day closures in the next couple of days. This would be quite surprising. So far, it's the odds are bullish, and if we look at the bigger frames, let's say the monthly closure was very bullish at the moment, and even though we might see a pullback at the beginning of July and even through the next week, so the chances for a reversal, for a continued move higher, are fairly significant. If we look at the Elliott waves, this is the chart that we shared on June 9th, saying that this is going to be the target for the next move, and that's a very amazing target. So this is 2275.7967. This is something that the level that Russell hit on Thursday. So far, the wave down has been impulsive, but let's see whether it develops into a bigger impulse. At this point, I think that the blue count has slightly better chances. However, some technicals support the hypothesis that this wave is not done yet. So especially if it wraps here and forms a bullish candle, I would be looking for a potential purple count here. So with wave 3 somewhere here, 2300 and maybe even higher. So that's the perspective for Russell, and for the long term, you can refer to our quarterly discussion, which was posted last week. We had a bigger chart, all-time chart. Speaking about some classical patterns, I think that Russell formed a strong inverse head and shoulders that we discussed it early in June, and so far it's been going up. So these are the potential targets with an ideal one, 2560 for the move to be completed after this particular pattern. Now let's talk about the Dow Jones. Dow Jones is bullish at the moment, and I would like to say that technicals are fairly strong here, and the 50 days moving average is pushing across the 200 days moving average, which would be a golden cross perhaps in the next couple of days. The daily so far is neutral. The weekly is, I already said that it's most bearish among all, but at this point it doesn't have a lot of technical support. So we need to see a strong confirmation on the candle side. The 10-day frame closed with the 3 white soldiers, and the next one to watch would be the 3-day formation on Tuesday. If it breaks, this is the current candle, it's not complete yet. If it completes below the 44,285, well, that would be a bigger top, and we might see another a few candles downward until this correction is over. If Dow Jones fails to close below this level, it would be a bullish closure, and we would be looking for a restart of rally. Not a restart, a continuation. If we look at the Elliott wave, so this wave has been in place for a while, and now I'm looking for maybe a little lower here to complete wave 4 and another wave upward. It should be wave 5 of wave 3. That's the technical consideration for now. Now let's have a look at the biggest contributors to the Dow Jones. At this point, Goldman Sachs closed with a bearish candle. However, it's not confirmed yet. The next week would be crucial indeed. And the Visa, I'm talking about finances here. So Visa is also bearish, and this one is stronger. It's a bearish engulfing, so there is a chance for a continued move lower. So the finance are somewhat bearish. But if we look at Microsoft, for example, Home Depot, Sherwin-Williams, Caterpillar, McDonald's, they are all practically bullish. United Health Group is, unfortunately, it is bearish at this moment. However, it could also be a foundation for a move upward. So far, there is no information about this, so I would say it's rather neutral. So that's the perspective for the large caps in Dow Jones. And oh, this is our website. So if you're interested in our bigger reports, in high quality technicals and charts, you can visit our website, and our recent report was Dow Jones Weekly Review. Well, that's about indices, and now let's talk about special features of the day. And the first one would be Amazon. So Amazon is clearly bullish, a very strong 2 golden crosses in practically in 1 week, 50 over 100 and 50 over 200 daily moving averages. There is no indication about a pullback. The weekly closure was also bullish, and the 10-day frame also closed with a bullish candle. The monthly, the June candle was completed a bottom practically, and now we are looking for a continued rally, all supported by technicals. If we look at the charts, so we had earlier this year in February 4th, we had a big call on Amazon saying that this is a top, and now we are looking for a drop towards 162, 143. This is exactly what happened. We called it 242. It dropped to 162. And after that, we said, well, Amazon likely completed the correction and now is looking for wave 3, which would be somewhere here between 340 and 420. Although it might take a couple of years to go there, and obviously the path wouldn't be all bullish, so it will be up and down. We might see some healthy pullbacks down the road. So far, Amazon has been up almost 6%, and we are looking for a continued rally towards the target. Now let's talk about Microsoft. So Microsoft is also bullish at the moment, and we have on Friday we have a freshly made golden cross, 100 over 200 days moving averages. The weekly is another green candle, and the number of green candles are somewhat concerning at this moment. So we know that 8 or more in a row might trigger a significant pullback, so we have to watch this closely. But the bigger candles are healthy at the moment. 10-day closure was bullish, and we are expecting a move higher. Speaking about Elliott waves and classical patterns, I think that Microsoft, we discussed it at in the early June. Microsoft completed a significant bullish flag, and we are tracking its move towards the flag target. Whether it's going to be one wave or more waves, that's still a question. So far, Microsoft is pushing it towards the approximate target for wave 1. So that's the perspective for the indices and a few large caps. Now let's discuss our swing room. As of July 9th, our swing room stayed long on SPY. And since flipping long on June 16th, this SPX has added 283 points. Over the past year, while the SPX returned about 13.4%, our swing setups delivered 33. This is for Tier 1 unleveraged, Tier 2 unleveraged, and 31% for the basic room. That's the power of trading alongside master trader David and his disciplined algos. Reach out anytime for an exclusive entry discount at help@investingangles.com. And now let's wrap it up. So where do things stand as we head into the next wave? The S&P 500 has laid a solid foundation for a long rally. Don't miss the fresh statistical studies and long-term forecasts in our quarterly reviews. Nasdaq remains broadly bullish, though a healthy pullback could be in the cards. Dow Jones and Russell are a touch weaker but keep their long-term bullish path intact. The majority of very large caps are fueling that momentum, with Amazon and Microsoft flashing setups worth watching closely. Don't forget, the free Strategy Digest posted Saturday is ready for everyone. The latest Commodities Digest will follow later today for members only. For the price of a cup of coffee, you could see what's likely to happen to coffee on the markets and to many other commodities like energy, precious metals, and some softs. Our website membership gives you full access to all videos and written articles, the complete wave roadmap. If you find value here, share it with your circles, spread it in other media, and subscribe on YouTube to stay ahead of the noise. We chart the charts before the crowd even blinks. This is Investing Angles.